So we have we looked at the revaluation account, we looked at the goodwill account, and we started our capital, and we started our current accounts as well. Yes, that is a possibility because it is actually 6 years old. It's outlived its time. Thank you, Rakim. So we've completed those accounts. So what we are going to be looking at now is we're going back to do our income statement and statement of appropriation. Now, remember last week, Friday, we would have stated that you have this online, this format. So I hope everybody has it. All right, so let me go to view, and I'm going to make this look on one page, and I'm going to make it look a little bigger so that y'all can see it clearly. Right, so here, so it's Layne, Hart, and Brown. Why? Because Brown is coming into the partnership on November 1st. So that I want to include Brown in my heading. And we have income statement, statement of appropriation for the year ended the 30th of June 2013. And we said that in our question last week, we said that Hart, it said Hart decided to retire from the partnership business on October 31st, 2012. So you see I have here July to October, 4 months, and November to June, 8 months. So let's look at the question again, and then we're going to go from there because we want to be able to make sure that you are following very, very carefully along with what we are doing, right? So here we have our, and remember I told you about the old and the new agreement. So the old partners are Layne and Hart. These are the original partners. They are sharing their profits. So this is the old agreement. So make sure you make a note of that. Under the old agreement, which is the old agreement is between Layne and Hart. So what you need to do, when you write old agreement, write Layne and Hart in your book. So when you write old agreement, write Layne and Hart. And then when you write new agreement, write Layne and Brown. So under the old agreement, and this is what you will write under the old agreement: sharing profits and losses equally. Interest on capital, 6% per annum. Interest on drawings, because it said cash drawings, all cash drawings made by the partners. So the interest on the drawings, 4%, right? So these are the things that you will write under the old agreement. So I hope that you all are writing it now, so that when I ask you questions in this part of what we're doing, you are able to give me the answers. And then not only that, you are supposed to try to see if you can get this question done as well based on what I am going through. So again, Layne and Hart, old agreement. Profits and losses sharing equally. Interest on capital, 6%. Interest on drawings, 4%. And you will realize there's no salary. They didn't tell you anything about salaries, right? And then it comes here, and you would realize as well there is a loan. In here, loan, they said loan Hart. So Hart is a partner, had a loan, lend the business $6,000. So there's a loan from Hart, who is a partner to the business. So they did tell you anything here about interest on loan? They did tell you anything about the interest on the loan?
No,
ma'am, interest on capital and drawings.
Okay, they only told us about capital and drawings. They didn't tell us anything about the loan interest. So they didn't say anything about loan interest. So what is the interest rate for the loan?
5%.
5%. So you will also write that under the old agreement as well. The interest on the loan is 5% because it didn't state. So as long as it didn't state, it means that you must apply the conditions of the Partnership Act of 1890, which is if it doesn't state, the interest on the partner's loan is 5% per annum. Now, there's a possibility that they will not tell you anything about interest on loan under the old agreement, but they can come under the new agreement and tell you the interest on the loan. So you have to be careful with that, okay? Because under the old, they may not tell you the interest on the loan, which then it will be 5%, but under the new, they can come and tell you what the interest is on the loan. Or they can tell you what the interest is on the loan under the old, and then under the new, they don't say anything. So then it will flip.
That's why the dates are important, ma'am, so that you
Yeah.
can know for
Yes.
this year it's only 5%. For the next year, somebody come in with a new agreement and it's only about 3% and they change it or
right. And it's not necessarily the next year, is at the point of change. The interest rate change at the point of change. Okay.
but you said annually, so we will have to
Yeah,
put
but you
the
have to
number of
prorate
months
it. Yes.
over. Oh,
Yes.
okay.
Yes. You will have to prorate it. Right, because it is and the rates that they give you, all of these rates here they give you are yearly. So there's 6% per annum. This is 4% per annum, and the loan is 5% per annum. But because you have to prorate it, because obviously it is not going to be a full year. Okay, so then when we come here you have to take note that you have drawings. Remember they said the interest on drawings. So you have drawings here. So these are the drawings here. You also have a loan interest in here as well as $200. We deal with all of that. But when you come to the new agreement, additional information here, they say Hart decided to retire from the partnership on October 31st, 2012. So we know that the information they give you here is from July 1st. So if she's retiring on October 31st, that means she's there July, August, September, October, 4 months. So that's why we came up with the July to the October, which is 4 months. And then it says it was agreed that Wendy Brown would take her place. And then it came here and said that and if you look here, you will see when Wendy Brown came in on November 1st, right? Because here it says Brown invested $75,000 cash as capital. And this is it here. The $75,000 is already here in the trial balance, which means it's accounted for. And that is November 1st. So this is how we came up with the November, December, January, February, March, April, May, June. So that's how we came up with the November to June, and we got the 8 months for the change. So then when you come to the new agreement, you say Layne and Brown. So you say new agreement, Layne and Brown. And what did they say with the new agreement? It was agreed that Brown will be entitled to 2/5 of the profits of the new partnership. So what is the profit sharing ratio for the new partnership?
2 and 3.
Right, 2 and 3. So Brown is getting 2/5 and Layne is getting 3/5. Okay, so the new agreement is that the profit or losses will be shared 3/5 to Layne and 2/5 to Brown. Then you have the new partners. They said also the new partners also agreed that interest on capital will continue at the old rate. So what is the interest on capital under the new agreement? Make sure you're all writing this down,
6%.
6%, correct. The interest on capital under the new agreement is still 6% because they're maintaining the old rate. And then they say, but no interest will be charged on drawings. no interest on drawings. So when you're doing the new agreement, you will say no interest on drawings, which meaning when you do the new agreement, you should not be calculating any interest on drawings in the new agreement, because they said no interest will be charged on drawings. This is how you read these questions. This is how you analyze these questions, right? Because we find that the students get a challenge with analysis, and this course calls for a lot of analysis. When I do a lot of analysis, this calls for analysis from unit 1 all the way down to unit 5. Lot of analysis, especially when you come to units 3 and 4. You have to do your analysis. All right, so this is how you read these questions. Under the new agreement as well, it said Layne will be entitled to a salary at a rate of $1,800 per annum. So that's another thing. So I hope y'all are writing in your books, Layne entitled to salary. So Layne's salary, $1,800 a year. So Layne is getting salary of $1,800 a year. Remember that I said that the salary for a partner is not the same as salary that is given to the people that are working. Okay, so Layne is entitled to $1,800 a year for salary. And take note that it says here Layne got $600, because this is in the trial balance, right? So it's entitled to $1,800 a year. And then it says, and Brown, remember this is new agreement. So on the new agreement, you write salary, Layne, $1,800 per year. And then Brown will be guaranteed a profit of $24,000 per annum. So then you can write in your books, Brown guaranteed profit, $24,000 per year. That's the minimum that Brown could get per year in profits, $24,000. So you make a note of that. So I hope you're making a note of that. And since that I would have come here to guarantee profit, I want to remind you, I sent you the email last night that there is an instructional video is under unit 1 called guaranteed profit. And in that video, I would have done the question Doyle, Lee, and Carter and demonstrated the guaranteed profit. So you will see it being demonstrated in this question as well, or you can attempt it, right? So we've come to those, that information there. In our trial balance, sales is $186,000. Cost of sales is $91,100. We have our expenses and etc. So we look at note number 3, right? Note number 3 is important when we are dealing with our sales, trying to calculate our gross profit, etc. So note number 3 says the business was only, okay, listen carefully. You see this word only? This is a strong word here. The business was only able to generate sales of $46,500 while Hart was a partner. So if you look back to the trial balance, what is the total sales? The total sales for the full year, from July to June, from July 2012 to June 2013, the total sales are $186,000. That's the total sales for the year. However, out of that $186,000, only $46,500 in sales were generated while Hart was there. Tell me something about that. What do you think about that? If only, what percentage then? Can anybody tell me what percentage of the sales were generated while Hart was there? What percentage of the sales were generated while Hart was there? Let me see who they're gonna call some names.
5%.
Okay, pardon, repeat Shantae.
25%, ma'am.
Okay, Shantae said 25%. Aaliyah Cox, do you agree with Shantae that it is 25% of the sales were generated? Okay, Rakim,
Ma'am,
tell
I
me.
agree too.
Yes, ma'am. I
I
agree.
agree,
Get out.
ma'am. I got
Okay.
25.
Okay, so we have, so Aaliyah is telling me so. Aaliyah Cox, we have Shantae, and Chloe says she got out as well. Okay, so they're saying that there's 25% of the sales. Anybody lost at how they got 25%? Anyone raise your hand if you know that you are lost. We have person like Anna, we have Alicia, Aaliyah Gill, Angel. Okay, so whose hand is in the air? Let's see who's that person that raised their hand. Joanna Hines. Okay, Joanna Hines said that she's lost, and Anna also said she's lost. Can you all see the chat? Joanna and Anna? Rakim just put the calculation in the chat. Can you all see the chat? Okay, right. So you understand how they got the 25% now? Right. Okay, so Joanna said she wasn't sure. So Anna, you're clear now on how they got the 25. Yes, please. Yes, and Alicia said yes as well. Because the question stated that, wrong window. It stated that $46,500 in sales were generated while Hart was a partner. So it means that out of this, and when I say out of the 186,046, when I say out of the 186,046,500 was generated, when I say out of that is 46,500 over the one, so that's out of over the 186,000, right? So once you take the 46,500 divided by the 186,000 multiplied by 100, you get that 25% there. So 25% of the sales were generated while Hart was a partner, which means that the other 75% were generated while Brown was a partner. So Layne and Hart together produce 25% of the sales, and Layne and Brown together produce the other 75%. And then this part is important again. It says, it was therefore agreed that any apportionment of profits would be made on the basis of sales. So it means that when we are apportioning our gross profit must be apportioned in the same manner that the sales were generated. Okay, so any apportionment of profits will be made on the basis of sales. So 25% of the sales were generated while Hart was there. So that means 25% of the gross profit would be when Hart was there. The other 75% of the gross profit is when Brown was a partner. And then it go on to say, at the end of the year, selling expenses of 380 were prepaid, while all of the carriage outward was incurred before Hart's retirement. And then it speaks about depreciation. Depreciation is to be charged on buildings at a rate of 10% on valuation. Now, the other tutors, so some of you all may have friends in the B group, right? So if you have friends in the B group who is doing this question as well, the other tutor is not doing this part here. She's looking, she's ignoring this depreciation. So she's not calculating depreciation at all. Okay. However, I am going to look at depreciation. So you will find that persons in that group are going to have different figures from you. Okay, so that is what's going to happen, because we are doing two different things with the question. So let's look at our spreadsheet. As a matter of fact, right, so we see sales. So this is what you got as your template for the change. When there's a change, this is your template, and it starts with sales. Remember, if you have sales returns, you have to subtract that. Okay, so it has sales, then it has less cost of goods sold, and then it says that your cost of goods sold is your opening inventory plus your purchases minus your closing inventory, gives you the cost of goods sold figure here that's subtracted from your sales to give you gross profit. However, in this question, we don't have any opening inventory purchases or closing inventory because they give us the cost of goods sold figure. So we can take out that particular portion there. My apologies. You usually have to check when you hear the payrolls making noise. So we have, so as I said, you don't have to calculate your cost of goods sold because they already give you the figure. So we can take this out here. We can take out this section here. We can take that out. And remember, we don't have to give you a question where you have to do the trading account and do all of that work, because sometimes we can give you a question where you just start at gross profit. We can give you a question where you start at net profit. So we can give you a question where you start anywhere, right? But you just need to know how to make sure to do the work. So our sales is, the total sales $186,000, right? Oh, what I'm going to do, right? What I'm going to let you do for me, I'm going to give you 2 minutes. Everybody, you're going to work out we have the sales, you know what your cost of goods sold figure is, and I want you to work out the gross profit, and then I want you to split that gross profit for me. You see, this is the format that you have here. So I want you to do your sales, then I want you to do, I already have these sales figures for you, so you could just put in your cost of goods sold figure and work out the gross profit, and then split that gross profit to me. So go right ahead, 2 minutes, everybody. And don't forget, I'm gonna call on you, So just leaving this here. So you can say cost of goods sold, or you can say cost of sales, right? Cost of goods sold and cost of sales, it's the same thing. So y'all have the question. So let me see. Okay, so Rakim, what it is you want me to repeat for you? What it is that you're supposed to be doing? Or you need to I want you to calculate the gross profit, and then I want you to split it. Yes, please. That's what I said, Joanna. Do the gross profit and then split it. And then I'm going to be asking, is 24 minutes past? At 26 minutes past, I'm going through the class, and I'm going to be asking what those figures are. Hear what persons tell me. So let me get my list. Great. Let's start. Okay. Miss Cox.
Mom,
Nothing yet?
the gross profit is 94,900.
Okay. You split?
No.
Not yet. Okay. Abby, you want me? Go ahead. Not hearing you. I'm not hearing you clearly. Go ahead again, Abby, you want me?
I'm gonna type it.
Okay. You're typing the gross profit?
That's ma'am.
Okay. Well, you could have said no because I was hearing you clear then. Okay, so you say your gross profit is 94,900. You split it yet?
Okay.
Okay. Aaliyah Gill. Aaliyah Gill. Okay. I'm not hearing Aaliyah. Alicia Boyne, sorry, Alicia. Okay, all right, Aaliyah. You haven't split it yet either. Yeah, go ahead, Alicia. Go ahead.
Yeah, I got the same gross profit, but I
But you
ain't
haven't
split it
you
yet.
haven't split yet. Aaliyah, you haven't split it yet either.
Mom, I got a question about this split. Is
Right.
it equally?
Are you all you do your
But
thing.
I
Do
did
your
my
thing.
thing. I did my
Right.
thing.
All right, you
Mom, I
all
have that same question.
okay. All right.
Excuse me, ma'am.
Mhm.
I had split mine. This is Raquel.
Yeah,
I
Raquel.
had split mine. Mine was 25%, 35%. Is that
Okay.
right?
I even see. They have Anna.
Oh, I do the same thing as
Mom, I
Raquel.
do the 25% aside 5%, but I know
25.
working it out too. But I
Mom,
got
Uh,
I
the
did
94,
that.
900.
so you get 94,900 and you doing the same as Raquel.
Yeah.
Okay, so Chloe saying that she do that, she think, all right, Jonathan, that's a split for me. Jonathan, that's a split that you're giving me. Okay, okay, all right, okay,
Yeah,
all
man.
right,
Um,
okay. Yes, Shamar.
what I did is I do the total, and then
Uh-huh.
like I split it by doing 4 months over 12 and 8 months over 12.
Okay, so you
Uh,
split that way.
yeah.
Okay, Kali giving me something too. Kali, you did it the same way as well?
Yes, please.
Okay, the same way Shamar.
Mama did the
Yeah.
same by the month.
Okay. So who you other person? Daniel Yard. Who is the person that said they did the same thing but the bumps?
Did
Okay.
me just on the
Or Jasanta. Okay. The all right. Daniel Yard. We hear Daniel and Declan.
For the old agreement, I got 23,725 and the new agreement 71,175.
Okay, so you split Declan. Yes, please. You get the same thing. Okay, as Danielle.
Yeah.
Okay, all right. Somebody raising a hand. We have Destiny. Tell me something, Destiny. Oh, Jonathan got it behind. Is that Jonathan? All right, Jonathan, come out of you. Yes, Destiny.
I had a entry 725 and then 71,175.
You sound like you too sure about that, though.
Because people say different things, so I don't know.
Oh, so you feel that you doing something wrong now?
Yeah.
Okay, all right, Dante. Yes, Jonathan. Go ahead with your question.
I didn't. Well, no. You see, this way is stupid, right? But I had get the split, but then I
Uh,
had share it. So that was where my 11 somebody come from. My 11,867. Where it
oh,
is share.
okay. You say you did the
I thought you
split.
the mean split and share, so I went straight split and share. I didn't know you that just mean split it.
So you split and then you share. When you say you share, when you share, maybe you're talking about sharing. You give
You
Lynn
share your
some of,
profit?
or you give Lynn some and Hart some.
Yes, please. I split it with them agreement, which is equally, which
Or
should be the 11,867.50.
or okay, or okay. All right. Dante,
I'm trying to get it split, man.
you trying to get split. You get gross profit?
Yes, please.
Okay. Erisha,
That's my, I have the same thing
you have
I
the
think
same as the
as
majority
Daniel.
person? As
So the
Danielle?
yes, the still is the same 24/7.
Oh, okay. Um, Jacoby, Jonathan, you have another question?
No, man, that my
Oh, there's
body.
an old hand. That's a old hand. Okay. Jacoby, I heard Jasanta say that she got the same thing. Some, I think Jasanta speak to me. Jacoby, Jessica said she had a same question as Chloe.
Yes, ma'am. I tell you, I have the same as well. I split by months.
Okay, as months, right. Jacoby Hall, I'm not hearing you. And then Jody. Heard from Joanna. Heard from Jonathan. Jacoby Hall, he's not here. He's just logged in. So I may have to mark him absent. I heard from Julia. I saw Julia. And I heard from Kelly. Remember when I call on you in class and answer a question, you don't respond, you're not here. Kian Warrell. So me make a note next of Jacoby. Absent.
Yes, ma'am.
Yes, please.
I got the same thing.
What is the same thing that you have?
The 23, 7, 25, and 71, 173.
Okay, all right. Kenya.
Mama,
Okay, Lionel.
Yes, ma'am. I know get back.
Okay, Oh, you step away.
Yeah,
If you all are stepping away, just either hit the mic and tell me you're stepping away, or put it in the chat so that I know that you step away. Okay.
no problem.
You know what you're supposed to be doing, Lionel?
No, please, just stay away for a little bit.
Oh, you were supposed to be calculating the profit for the gross profit and then splitting it.
It say what to split it, how to split it.
We went through that, so that means you miss a lot.
I guess so.
Okay, but calculate the gross profit to me though. Natisha.
Ma'am, I can't fit it, but I feel the right way is to split it by the months.
Okay, so you did you split it by the months?
Ma'am, I do it both ways, to be honest, so that whichever way you choose, I got all answers.
Yeah, what?
Mom, I got rough paper. Not that I put it in my arm because if I got rough paper doing it on.
I understand you, but you was like, whichever you
I
choose.
do the same thing. I do both.
And Leah, you tell so you're giving me multiple choice. So you can write.
When you go through it, then we would know which one is the way we're supposed to go.
So you can put both on paper. They gotta choose which one correct.
I got scrap paper too. You decide.
I hear you, Naisha. I hear Rakim already.
Mom, I don't know if my reasoning is right, but in the question it said that the 46,500 was the sales that was generated while Hart was in the partnership. So and that would already be 25% that we find. So I find the 75% of the 94,900. But I also do it how everybody else do it too. So I don't know which one it is.
Wait. Everybody's saying do it a particular way. So you want to tell me that you also do?
I do the
4 and the 8.
No, I do the months one. I do the one where you're the 94,900 times 25%. Then I know this right, but I do the 91. When I subtract I subtract something and get out 91, 100, and then I multiply it by 75%.
And then when you get that answer?
68,325.
Okay. That is a strange one there. All right. Okay. Rashawn. Mr. Parson.
The old agreement, I got 23, 7, 25. The new agreement, 71, 175.
Okay, Raquel. I think I heard Raquel before.
Yes, I did the 25 thing.
And I heard Shamar before. I heard Shante. Shante heard you? No?
I got 23, 7, 25, and 71, 175.
Okay. All right. And you call it Jacoby one more time. You hear what Jacoby has to say. Jacoby Hall. Mr. Hall. Going once. Going twice. Gone. He's not here. All right. Okay. So we talked about it. Some interesting ones that are coming out there. Okay. So I was listening to, I think it was Naisha was explaining what she talked about it when she said that the cost of sales is 91,100. So that's the cost of sales. And then when you subtract the cost of sales, you get
94,900.
94,900 as your gross profit. So we have a gross profit of 94,900, and then we talk about splitting. So our gross profit is 94,900 here. That's the original gross profit there. And then we said we're going to split it and persons. So if you're splitting it, that means that we're looking at what the gross profit was under the old. So persons would have said that that was, you had the 25%. How they calculate 25%, it was 46,500 divided by the 186,000, which gave them 25%. Right? When I multiply that by 100, it gives them 25%. Right? That's how they came up with the 25%. Persons did, because they said that is the initial calculation, and it was stated, persons stated that this 25% here is that 25% here is the amount of sales. So 25% of the sales were generated under the old, and the other 25% was generated on the other 75%, sorry, was generated under the new. That is what person stated. So I am going with that 25% of the sales were generated under the old, and the other 75% under the new. So if 25% of the sales is under the old, that means that 25% of the profit supposed to be under the old and the other 75 under the new. So therefore, that would be 94,900 times 25%, 23,725. And under the new,
Mama had got that number, by the way.
yeah, okay. And this is where I found something funny with Naisha. Naisha did something. She said she subtracted some figure from something and got 91,100. Or she subtracted the 94,900 from the 186,000. I believe that's what she did, and gave out 91,100, and then found 75% of that. Because she said she 91,100 times 75%. She got 68,325. This is where you would have gone wrong, Anisha, because you were subtracting the same gross profit you just calculate from the sales and coming back with your cost of goods sold. So what you should have done was to either subtract the 23,725 from the 94,900, because you can do 94,900 minus 23,725, and it gives you the gross profit under the new, which is 71,175.
Mama get that out too. I tell you so just now.
Yeah, but then you tell me that you just subtracting something.
Yeah, because I didn't know what to do.
But that means that you doubted yourself.
But mom,
yes, ma'am, we do that.
With so much answers, they don't know what to do. Then they read back the question and say, well, you got the 25%, so 25. But then it's started everybody else, so I went calculating over again.
You see, that is why sometimes you have to stick to what you believe. Yes, Layne.
Mom, exactly what she's saying, ma'am. You see a bunch of numbers in there, you get frightened. You don't know if you're wrong or not.
Yeah, but because you hear a bunch of numbers in there, the million Frenchmen sometimes could be wrong.
That ain't very likely.
It ain't very likely, but it's true. I agree. A million Frenchmen could be right too. But I am saying that there's a possibility that everybody in the class wrong and you're right. Because they had a situation like that with the other group on Friday. That one body said something and everybody in class agreed with what the person said. And the whole class agreed, but all of them were wrong. I was the dissenting voice. So sometimes I find that this happens too when people are doing projects as well. you argue your point and your reasoning, because your reasoning and your logic for what you're doing helps me to understand whether you fully understand or not. So when you're going through, so you could have done it this way, the 23,725 subtracted from the 94,900, or you could have done 94,900 times the 75%. Have gotten the same figure. Other way is correct. Yes, please.
I was a little scared about my answer too, because when I was thinking about it, it was telling me like 25% of the sales. So I was thinking back in my head, why not my 25% of the sales and work it out using like what take out. Let's say for instance I take out that 46,500 and then minus the 91,100. Whatever I get will be my total.
So repeat again. You are saying if you see 186,000 minus the 46,500,
right, which is the 25%.
that would be the 75%. That would give you $139,500. That would give you 139,500 when you subtract that. So you would still got to turn around and multiply that by go ahead.
But I was just taking it that way because when I hear it said generated the sales, so I thinking it got to do with the sales profit and not overall the gross profit.
No, but remember the question also states that your profit is prorated in the same manner that the sales were generated.
Oh, so basically, I get it.
Yeah, however you generate the sales, the profit is also generated in that same manner as well. So this here is your original gross profit here. This is the original gross profit that you would have calculated here, 94,900. But then you took this 94,900 and you split it between the old and the new agreement, because since 25% of this sales here was for the old, it means that 25% of this profit is for the old and the other 75% is for the new.
Okay, understood. Thank you.
You're welcome. So what I am going to do, I'm going to stick a pin here for today, and I'm going to work you a bit. So what you're going to do for me, you are going to go on now and use the same outline. You're going to add your other revenues to your, because we have other revenues. So you're going to add your other revenue to your gross profit under the old and under the new. And then I want you to go down and do your expenses. So we are going to come back at this Wednesday evening. And I want to hear, before Wednesday evening, I want to see something in that Dropbox. Remember to put it in the correct Dropbox. The Dropbox is under Partnership Changes, Unit 2A. So I want to see something from all of you in that Dropbox before Wednesday, so that I can pick on it and look at it to see what your thought processes are. Currently, I have somebody, I know at least one person for sure in the C group is currently working on this question. And all I did with them so far is up to this stage and the revenue, right? So they are working on it as well. So once you work on it, it gives us a chance to have some discussions on it and to gather what your thought processes are with respect to everything that we're doing. All right. So before we go, any additional questions? See if somebody has something in chat.
I might have a question.
Yes, please go ahead.
By any chance, you don't split the other revenue in half, do you? Or, well, you don't split it.
Joanna, tell me what you think when it comes to the other revenue.
I think what you have to do is that a number that is given into a balance, I think you just put it under the old and new agreement and then total it up. And they total it. That's my thoughts.
Your thought is to take the figure that you have in the trial balance, and when you said just put it under the old and new, because you can't put the same figure under the old and new, because then it's gonna be more than what is, because it's gonna be more than trial than what is in the trial balance, because the figure in the trial balance for other revenue, right? We have commission receive, right? In the trial balance, that commission receive is $1,500. If you put $1,500 under the old agreement and then $1,500 on the new agreement, that is more than $1,500. The trial balance only give you $1,500.
You answered my question no more. Thank you very much.
Oh, I did?
Yes,
okay.
you did.
My way would do, right, is that if I don't see anything for the new agreement, just leave the old agreement blank, and that'll be what it is. Because if you didn't give me anything concerning revenues in the old agreement, what were they gonna add saying in it? Oh, just put it in the new agreement.
No, I can tell you what you all need to do. You need to go back to the PowerPoint presentation that speaks of partnership changes and see what it states with respect to revenues and expenses. There are two, it speaks about revenues and expenses and what to do. So you need to go back to that before you make your decision and what you're going to do with that other revenue. I'm not going to tell you anything.
But hear me out, right? I think you're going to specific. Want to know why? It's because it said the same number 3 agree that any apportionment of profit will be made on the basis of sales. So I think you got my right 25% as 25% as well.
Okay, that's what you think. Okay, good. Okay, fair enough. And Julia is saying you have to split it, and she said 4 and 12 multiplied by 1,500. So we will see. We will see on Wednesday. Yes, please. Yes, Layne.
There's you keep me.
Sorry, Jonathan. Sorry, Jonathan. Because Jonathan, your voice is a little bit like Layne's.
No, it's not.
Sorry, Layne. Oh my God. Sorry.
But
my apologies, gentlemen. Yes, please.
To play devil's advocate, because I know, well, I believe I know what you're doing at ice cream, but to play devil's advocate.
What you want, please, devil's advocate?
You can't divide that same 1,500. But hear me out, no, ma'am.
I hearing you.
But
listening.
you can't take that same 1,500 and divide it by 12 and work it out that way too.
But so you're gonna divide it by 12 and then do what?
And then on the month's basis.
On the month's basis. 4. Oh yeah, yeah. But if you do it that way, it's still the same as 4 and 12 and 8 on 12. It's still the same thing.
But not still right.
The same thing. I am not saying whether it's right or wrong. If I'm saying whether it's right or wrong, because we have all kinds of thoughts on this here, but like no shaking the head, but we will see. I can leave you all to ponder that. And I told you all about the notes, so you all will read the note and ponder it. And then you all can get in your WhatsApp chat and you can discuss it in your WhatsApp chat as well. As a matter of fact, if you have Microsoft Teams, you can do a Teams meeting with each other by just going to
Man, we heard that it didn't really follow properly, so we are not using
Google. You are not using Google Meets, no, but you can just sorry, I did the wrong thing. You can just go and click Teams, Microsoft Teams. If you click chat, you click chat. When you click on the chat, here where it says new chat, so it says new chat. When you click new chat, so you could do it through the chat. You could hit new chat and you could enter the names of the people that you want to chat with, and you could call them into the chat with you. And you could do, when you do that, then you could do here, there's something called meet now. When you go into the chat, there's something said meet now, and all y'all can meet now inside the Teams. But if Google Meets work for you, fine, that's no problem.
Mom, I would have had to use Teams to like do a group call. At first, I add somebody that I know already, and then I just type in the names for people.
All the other people, yeah, that's what you do. So Chloe know how to do it, right? You just bring them in. You do one person, and then you call all the other persons into it.
Mine's different from yours because you had to go and add a chat and everything. You just call a person, click participants, and then type in names of people. And since we in the same class or in the same teams, when I type in the name, it automatically show up, and I just click it.
Right. But you can say it from a different perspective because remember you sign it under one thing and I sign it under something different. Right? So that's just basically it. But as I said, if the Google Meets work for you too, go ahead, fine. But you could do it through the Teams. So y'all can have your WhatsApp group discussion, or you can have a Teams discussion or a Google Meets discussion. And we will come back on Wednesday with that. All right. Any more questions? Do I have a field there? Layne and
I want more questions.
Okay. My apologies to the gentlemen, the goodly gentlemen, Layne and Jonathan.
You good, man.
It's a sad thing to have twins in the class that are going to be, Layne, you know that you this thing, Miss Celie and Jonathan is the same thing. But anyway, let us leave that there and just wish everybody a good afternoon.
Good afternoon, ma'am.